Hello everyone, here are the latest market news on May 4th, 2020. US set to remove supply chains from China. The Trump administration is working on an initiative to remove global industrial supply chains from China as it's set to impose new tariffs to punish Beijing for its handling of the coronavirus outbreak, according to officials familiar with U.S. planning. We've been working on reducing the reliance of our supply chains in China over the last few years, but we are now turbocharging that initiative, said Keith Krach, undersecretary for economic growth, energy, and the environment at the U.S. State Department. The U.S. Commerce Department, state, and other agencies are looking for ways to push companies to move both sourcing and manufacturing out of China. Tax incentives and potential reshoring subsidies are among measures being considered to spur changes. Shares in oil decline amid U.S.-China dispute. Stock markets fell and oil dropped on Monday as the U.S.-China spat over the origin of the coronavirus put the brakes on optimism about the economic recovery as countries around the world ease restrictions. On Sunday, Secretary of State Mike Pompeo raised concerns of the market, saying there was a significant amount of evidence that the virus emerged from a laboratory in the central Chinese city of Wuhan. However, he did not provide any evidence. U.S. stock futures last traded 0.7% lower. In Europe, FTSE futures fell 0.6% and Euro Stoxx 50 futures declined 3%. While China and Japan were on holiday, MSCI's broadest index of Asia-Pacific shares outside Japan fell 2.5% as Hong Kong's Hang Seng returned from a two-session holiday with its biggest drop in 6 weeks. Meantime, U.S. West Texas Intermediate crude futures fell 5.1% to $18.77 per barrel, while Brent crude futures were down 0.4% at $26.34 a barrel amid worries a global oil glut may persist due to slumping demand. Manufacturing PMI in Europe marks its biggest drop. Manufacturing activity in the Eurozone slumped last month as government-imposed lockdowns to stop the spread of the new coronavirus forced factories to close and consumers to stay indoors, a survey showed on Monday. IHS Markit's final manufacturing purchasing managers index for the Eurozone dropped to 33.4 from March's 44.5, marking its lowest since the survey began in mid-1997. This figure was lower than earlier flash reading of 33.6 and significantly below the 50 mark, separating growth from contraction. With shops closed and consumers concerned about their health and employment prospects, demand tumbled last month to the lowest in the survey history, with the new orders PMI came in at 18.8, almost half March's already weak reading of 37.5. Telefonica plans to merge with Virgin Media. Spanish telecoms firm Telefonica S.A. confirmed on Monday it has opened talks with billionaire John Malone's Liberty Global plc over a possible merger of the two companies' businesses in Britain. The talks to merge Telefonica's British mobile operator O2 and Liberty's Virgin Media Network company have just started. A deal between Telefonica and Liberty would end uncertainty around the fate of Britain's biggest mobile operators after it was repeatedly touted as a possible candidate for a sale of a stock listing in recent years. It would also offer Telefonica a way to partially cash out from O2 while retaining a presence in Britain, which the company sees as one of its core markets along with Spain, Germany, and Brazil.